Good morning. Welcome to Trading Hour. I'm Reema Nandulkar. With me are Sonia Shenoy and Pavitra Parekh. And girls, it's been a strong start to the week, right? The Nifty, as we speak, has scaled at 18,100 mark. 250 points on the Nifty, while the Sensex has gained 850 points. We've snapped a three-day losing streak, and the up move today is aided by the strength seen in the global markets. US had a strong close on Friday, and it's followed it up with strength in the Asian market screen as well. All the sectoral indices are currently in the green, but the top honors goes to the Nifty IT index, a rub-off from Nasdaq overnight. The Nifty IT index 700-point rally, 2.5% up, and the other global denominated sector is metals, and that's doing well. The advanced decline ratio is healthy. We've got nearly 4 stocks in the green for 1 in the red. So let's just pull the advanced decline ratio. 2,200 stocks currently in the green. Some cues to track. We've been talking about the IT earnings, TCS today, but through the course of the week, the other IT heavyweights will be declaring their numbers. For India, the December CPI and the November IIP is on Thursday. And watch for the flows, because the FIs have sold in the cash market for 11 consecutive sessions as of Friday. And plus, you've got the US CPI on Thursday, and that will be the last big input into the Fed decision on the 31st of Jan to 1st of February. So that's going to be very important to track too. Hi.
Hi, morning. So lots of data hitting us, right? Starting today with the earnings season. So we got our hands full. But, you know, a couple of things. I'm just watching out for this 100-day moving average very closely. Now the Nifty has gotten above that, which is 17,900. But if we stay above that through the course of the day, then perhaps this pullback is something that can continue. That's the view that came in from a lot of the technical experts we spoke to earlier in the day. The global cues continue to be very strong. So even as we speak, Asian markets are surging. Hang Seng is up about 350 points. And the other big positive trigger for us is the fall in Brent crude. Now crude is down over 8% in the last 1 week and falling further. So that's, of course, positive for us. The 3 big Nifty gainers that I'm watching this morning, one is Bharti Airtel, where CLSA has raised their target price to 1,040. TCS, of course, we'll be talking more about that. It's up 3% ahead of its earnings. And M&M is also surging now, up almost 3%, 3.5%, 4%. The management is very confident of achieving the number 1 market share, being the number 1 market share player in the SUV segment. So more on that in a bit. But so much data coming through. We have an action-packed one hour.
Oh, absolutely. And like you were saying, the global cues are looking so positive. In fact, even the Dow futures up almost 100 points right now. So that will come up for you. If you take a look at what's happening on the sectoral index level, of course, IT is doing very well, but this is also after 2% cut that we saw on the index on Friday. So do keep that in mind. The metals pack adding on to the kind of trend that we've seen in the past few days. So a few of those names will be up for you. We got updates from Tata Steel, JSW Steel. So that entire pack is in focus. Reliance is also one of the bigger gainers. So that one is supporting the markets right now. And then you have, some of the new age companies. Paytm posted the updates. So that stock is up, but you have the likes of Zomato, Fino Payments Bank, all of these also faring pretty well today. On the downside, I mean, all sectoral indices are in the green, but you are still seeing a little bit of an underperformance from the Nifty bank. So that is going to be crucial to watch. And, perhaps a higher move on that is what could really spur the market higher as well. So that's what's happening on the market front. But let's now talk about these individual stocks which we were just mentioning. Paytm is up almost 4% on the back of their business update. So Surbhi is here with the details on this one. Surbhi, how's it looking?
Hi, thanks for that. So their Q3 update looks pretty good. The value of loans disbursed were up 36% sequentially at 9,958 crores. The number of loans disbursed were also up 11% at close to 1 crores versus 92 lakhs. The GMV was up 9% sequentially at 3.64 lakh crores. The monthly transacting users were up 6% at 8.5 crores versus 8 crores in the last quarter. And the total devices deployed was up 21% at 58 lakhs. Along with that, the Paytm Payment Bank also received RBI approval to appoint Sundar Chawla as the Managing Director and CEO for the next 3 years. Back to you.
Okay, thanks a lot for that. Well, looks like all that glitters is not gold, because Titan is down about 1% post its update that has come through. But on the flip side, Kalyan Jewellers is doing pretty well. Mangalam is here to give us details on those numbers. Mangalam, over to you.
Well, it glitters, it is gold, but turns out that some is expensive, some perhaps not. So that's exactly what is playing out in the jewelry sector. If you just take a look at Titan, resilience is what the company has reported this time around. 12% growth in their overall sales. Store additions on a consolidated basis at around 111 odd. Let's take a look at their sectors. Jewelry business grew about 11% on a base of 37% growth last year. So that makes a 2-year CAGR of over 23.5%. And quarter on quarter as well, there was a growth of 24%. The company said that sales from studded jewelry actually outpaced the sales of gold jewelry. So that means margins were also better this time around, and they've added 22 new jewelry stores. Other businesses, that was the one that really stood out from Titan this time around. Watches grew by about 14%. Fashion, fragrance, as well as Taneira, which is ethnic wear, both of them grew anywhere between 40 to 150 odd percent. Eyewear grew at around 10%, and Carrot Lane, with a 75% studded ratio, grew at around 50 odd percent. But remember, Titan, not particularly cheap. Over 60 times 1 year forward earnings, so as a result of which some profit booking on account of that. But on a much smaller base, Kalyan Jewellers went ahead and reported a revenue growth of 13% on a consolidated basis. Revenue growth for India has been 12%, and non-South markets recorded a much higher revenue growth. Gross margins for them as well grew sequentially, quarter as well as year on year, and they added 5 new Kalyan stores, all 5 of them in the non-South region. So that was one of the triggers for Kalyan Jewellers' growth in outside of their core markets of South India. That stock up 4% as we speak, because it trades at a sharp discount to Titan.
Okay, thank you very much for that. Get into a break. On the other side, we'll talk commodities. Manisha Gupta joins us next.
Okay, well, the markets are looking good. Look at the Nifty zoom now, 250 points higher. But we have to take a bit of a breather from equities and get you an update on the commodity markets. Manisha is joining us. Manisha, today the focus is on global food prices. Take it away.
Oh, well, yes, Sonia. If you look at the global food price index, we have seen a decline for a 9th straight month for the month of December this time around. The decline has been to the tune of 1.9% on a month-on-month basis. And the food indexes that have seen a decline continuing, one is the vegetable oil that has seen minus 6.7% of a cut coming in for the month of December on a month-on-month basis. So is the case with cereals, down almost 2%. Meat price index fell 1.2%. The gainers, though, were the dairy index, where you have seen a gain by 1.2%. And sugar, that is clearly is the highest gainer, 2.4% of a jump up for the month of December. FAO also says that for the 2022, you have seen all-time highs in wheat and maize. If you look at the oil price index, that overall index hit an all-time high as well. And then dairy and milk products, dairy products also hit the highest since 1990. Even as we have seen the last 9 months see a continuous decline in case of food prices, FAO says that many staples still are trading on the higher side of the range, that is near record highs, that is. And the rice prices have continued to be firm. Rice was a late starter, but we have seen the last 4 or 5 months continue to be on a firmer note for that staple there. And also the farmer supply risks and many of those future supply risks are some of the factors that can keep the prices jittery. So FAO basically suggesting that we are not out of the woods when it comes to food inflation even now.
Okay, thank you very much for that. We're going to be watching the IT space very closely. Now, when it comes to the IT sector valuations, they are at a bit of a crossroad. They're not at peak levels, but they're not even at the historical level. So there you have it. For TCS, currently trading at 25.5 times forward multiple. The peak was nearly 32 times, but the average over the last 3 years prior to COVID was about 21 times. Similarly for Infosys as well. Current valuations, 21.5 times, a very sharp derating compared to the peak valuation multiple of 28 times. But again, the pre-COVID 3-year average return was about 17-18 times. So while valuations have corrected, they're still at a premium compared to history. Now let's tell you what brokerages expect from the IT pack. Now UBS says they do not foresee a meaningful downside from current levels for the IT pack, but they expect the sector to trade sideways. Kotak says the sector is stuck in a limbo. They believe the industry will face a tough first half calendar year before green shoots kick in only in the second half. Ambit says it's still not the time to turn constructive on the IT sector. Credit Suisse says it's time to be selective on the sector. They're only going with Infosys as the only outperform because the sector valuations are still expensive and there are still risks of earnings as well as valuation derating because growth is likely to moderate. CLSA is saying that last year the Indian IT underperformed massively. There is a possibility of a trend reversal, which basically means IT does well this time in this calendar year. But the upside is going to get capped because valuations still remain fairly expensive. So they're going to go with only a few select stocks. Infosys, because it's got a defensive portfolio, they've been aggressive on large deals. TCS, They're expecting margins to improve, and there is a potential of a buyback when it comes to TCS in Q1 of FY24. So that could provide that support for TCS. HCL Tech, they're saying there is a possibility that HCL Tech's margin guidance band next year will get revised higher. There will be improvement in margins, so that's why they're positive on HCL Tech. While LTI Mindtree, that's another large player now post the merger, they're expecting healthy growth in LTI Mindtree, and they're also saying the institutional holding in LTI Mindtree is fairly low, and therefore that will provide some sort of a base. So that's the view. There is no one out there right now who's going out there and say buy IT.
Okay, no one yet saying, this is the time to be getting into IT. Reema, thanks a lot for taking us through, all of the valuations. But today is going to be a lot about TCS. So take us through what we should expect in terms of the earnings, and also how does it look versus the other big player, that's Infosys.
Well, this time TCS's year-on-year revenue growth is likely to be higher than Infosys for the first time in 12 quarters. So, that's a fairly important milestone. So that's point number one. What to watch? We've been going over the numbers, right? Dollar revenue growth, 1.6%, some margin improvement. But in terms of other factors to watch, the company had guided for Q4 FY23 exit margins of 25%. Does the company hold on to that? It's likely because this quarter we're expecting margins at 24.7%. Second, deal wins. Deal wins 2 quarters back, they had guided for it to be in the range of $7 to $9 billion. Now that there is a macro uncertainty, does this deal win margin range stay? Thirdly, there was a TCS BSNL, a very large deal, $2.1 billion thereabout. Does that get consummated in this quarter? If it does, there is a possibility of an upside. 4, the focus on furloughs is going to be high. The furloughs impact in the December quarter was minimal for the last 2 years, in December 2021 and in December of 2022 because of compressed digital transformation. But this quarter, furloughs are back in full force. Also watch for TCS particularly because its Europe and UK exposure is higher than peers at 30%, where the slowdown is more evident. Also watch for calendar year 23 budgets. They typically get fixed in January, February. What is the rate of spending? Is it increasing? Is it decreasing? What are the priorities? Also, the management last quarter had said attrition has bottomed out. How much does it lower from here on? Watch for the employee addition numbers because they are likely to be low because attrition is weak, so you don't need to hire that many people to fill the people who've quit the workforce or quit TCS's employee base. But it could, if it's low, it could also be signaling lower demand in the future. And finally, the most important thing is going to be any commentary on buyback. Now, you remember there is a 1-year cool-off period from when the buyback ends and the next buyback can be announced. Now, TCS last year in the Q3 FY22 numbers on 12th of January had announced its buyback. The buyback happened in the month of March. So the cool-off period ends in March. So there is a possibility that in Q1 FY24, the company can go ahead and do a buyback because the cool-off period has ended. So does the company hint that they are looking at a buyback because, the stock price has declined? Just watch for some commentary on buyback because that could be the kicker for TCS.
Okay, by the way, a lot of stocks now are contributing to the rise. TCS, of course, is your big gainer, but just look at Reliance Industries at the high point of trade, contributing to the up move. M&M is your biggest Nifty gainer now, up almost 3.5%, and Infosys is also surging. So this is turning out to be a really good market. Let's slip into a short break. We'll put the spotlight on the FMCG sector. Abneesh Roy of Nuvama Institutional Equities will be with us on the other side.
Hey guys, welcome back. You're still tuned into Trading Hour on CNBC-TV18. A lot of the consumer names are in focus. We have been getting their updates. So we have Abneesh Roy joining us now. He's Executive Director at Nuvama Institutional Equities and joins us to discuss all of these individual names. Abneesh, good morning and thanks a lot for joining us. This is Pavitra. I want to begin by asking you about Titan. They've clocked in very good growth. It's also coming off on quite a high base. Their new businesses are doing well. The entire jewelry segment looks like it's really shining. Do you think this kind of growth rate is sustainable? Of course, we are coming off the festive season as well. But do you think that this kind of growth rate is sustainable?
Yeah, thanks. In case of Titan, yes, last 2 years has been extremely good. So Titan does face higher base issue definitely. But yes, we are seeing a strong marriage season as we speak. So partly it should address the high base issue. But one more thing which is slightly on the challenging side is now big fat weddings are back. So whenever we see that happening, the consumer spend on the jewelry does take a back seat. So that is also a slight issue, but that's for the sector. Titan, of course, market share expansion will continue. They have a very, very focused strategy on the marriage demand and also on the South India. So I would say that Titan should still do better than the industry. But yes, high base and big fat weddings back. I think that's a challenge in the coming quarters.
But isn't it supposed to be good for Titan? If big fat weddings are back, then people buy more jewelry, right?
No, so how it worked, it's a good question. How it
Okay, well,
I think he probably means that, you know, people are spending so much on the weddings. Maybe they're holding back on jewelry spend, but you would expect
I
this
thought the first expense you make before you plan your wedding is buy your jewelry.
Yeah.
You know, at least that used to be the case way back in the day.
Okay, I think he's back, so let's hear it out from him. Abneesh, go ahead.
Yeah, so definitely in the base, also the spend on the jewelry is there. But now going ahead, people are spending more on the event. So that shift from jewelry to events and experience within the marriage, I think that is what is going to happen. So that is the challenge which all jewelry companies will face in the coming quarters.
Okay, I guess people after COVID as well have gotten used to the minimalistic way of life, right? People don't want to go all out. They may spend a certain amount, but I guess weddings have also become more expenditure, but lesser number of people, more sort of quieter weddings.
Intimate.
So maybe that's what, intimate weddings, maybe that's what Abneesh is referring to. But Abneesh, what are your thoughts on Godrej Consumer? Because, you know, we had a chat with the management a while back, and they indicated to us that despite all the challenges, the margins, gross margins will see an expansion at least for the next 4 to 5 quarters. How are you feeling about this stock?
Yeah, definitely we are quite positive, and Godrej Consumer is there within our model consumer portfolio with 20% weightage. So this is the first quarter when the results are visible in terms of the efforts which the new MD took. So this is one more data point that consumer companies will retain gross margin, will retain EBITDA margin in the deflationary scenario. First, we saw that in the tea companies. We saw the numbers for Tata Consumer in the earlier quarters and even Hindustan Unilever's beverage portfolio. Then we saw Marico's gross margins improve because Copra went down. And then now we are seeing that definitely GCPL also is seeing expansion in the margins. So I would say that yes, we will see further acceleration for GCPL and HUL also from Q4 in terms of margins.
Can you tell us what we should expect on the rural front? What were the trends that you picked up?
So rural continues to remain quite challenging. It is a base effect which is benefiting, but structural recovery for FMCG, I think even in Q4, we are not picking up. So Q3 definitely remains quite challenging. My sense is this will happen in FY24 only, and this will be based on deflation, which farmers sees in the diesel, fertilizer, and general inflation. Till then, in Q4, it is still a hope rather than any recovery which has happened. NREGS data in terms of job at the lowest end, there are some positive signals, but still I don't think we have a very strong trend there. So still challenging, I would say, in terms of rural.
Okay, rural is still challenging. In fact, this is what we were speaking about when Dabur's update came through as well, because they do have higher exposure to the rural area. They're factoring in sort of a margin contraction of 200 to 250 basis points as well this time. But Abneesh, quickly, if you could run us through your top picks in the sector, what do you think is better positioned?
Sure. So we have Hindustan Unilever, Britannia, Godrej Consumer, and Nestle among our topics. We also like ITC, but we'll wait for the February 1st there. So definitely these are the 4 companies where the gross margin expansion in the FY24 will be on the higher side. Plus, they will have a higher volume growth than the overall sector average. They are definitely aggressive in terms of the new launches, and on the rural also, whenever the recovery happens, HUL, Britannia, etc. will have a higher share because of the market share gains also. So these 4 companies are where we are overweight. We'll be underweight on someone like a Imami or say even United Spirits. Those are the companies where still the challenges are there.
Okay. Any thoughts on Asian Paints? There's a big capex plan that they've announced, over 2,000 crores, and I'm guessing they're expecting demand to pick up in a big way. Hence, they're putting up this new capacity. Would you buy it at this price?
Yes, we are positive on Asian Paints. In Q3, October demand was quite weak for the sector, which has recovered in November and December to a great extent. I think Q4 should be reasonably good. Of course, high base is there for paint companies also. But when I refer to the marriage demand, I think Asian Paints is going to get more benefit than, say, the jewelry companies. Because here, again, because big fat weddings are back, there is more travel, etc. People would want their homes to look better. And of course, from a raw material side, titanium dioxide and crude-related input, Asian Paints will continue to see benefit in Q4 also and FY24 also. So we are quite positive.
Thank you very much, Abneesh, for joining in. Need to slip into a very short break. On the other side, we'll discuss market technicals. Kush Bora of kushbora.com joins in next. Welcome back. Piling on gains, now approaching a near 1,000-point rally in the Sensex. We're up 950 points, 1.5% gain. It's the frontliners leading the charge. While the Nifty and the Sensex have gained 1.5%, the mid-cap index is up 0.9%. Axis Bank is heading close to its 52-week high of 970. So that's moved up close to about 2%. Reliance Industries has also been a big contributor. But as we've been saying, it's pretty much broad-based gains. It's only a Titan Industries which is subdued in trade. And that's because after many quarters, there was no positive surprise in their pre-quarterly updates. That is disappointed this trade, considering where the valuations are. But let's invite Kush Bora of kushbora.com to talk about the market technicals from here on. Kush, what a strong start to the trading session. Gap up opening, we've built on strength. Is there a trade at current levels or would you wait for lower levels?
Hi, Rima. First up, thank you for having me on the show. Well, I think the FIs are well and truly back after a break, right? And this is usually the time they return. But then again, see, the last time around I was here, I said 17,800. That's the level for me. As long as that is maintained, I will be buying the dips, in this market. Now, twice around, we've touched that level and rebounded from there. So for me, that view is still intact. Now, for today, the longer the Nifty holds above 18,000, 18,100, the stronger are the chances of a short covering rally, which is already underway. Now, look at, the case in point is look at 18,000 call base. It was the strongest when we, opened this morning. And now that is shifting to the 18,000 put. So the base is probably shifting a little bit from 17,800 to say about 18,000. For me, this is still a buy on dips market. So as long as 17,800 positionally and 18,000 for today is, held on to, I will buy the dips. Now, as far as Bank Nifty goes, the scene is slightly different there. Because even after this rise, the 42,500 call, which is at the money, is still seeing some writing. So for me, the Bank Nifty might remain under pressure, but Nifty seems to have broken out. And as I said, as long as 18,000, 18,100 holds, we'll be ready for that move towards 18,250, where the resistance is on Nifty.
Any individual stocks that you're looking at?
A couple of them. The first one is ABB. Now, the stock had seen a very sharp dip, but the rise has also been equally sharp. If you're looking at a near-term move, then 2,900 is my target and 2,845 is my stop loss. Positionally, 2,975 is something that the stock can move up to. The second pick is Bajaj Finance. It's the much talked about stock over the last week or so, isn't it? Now I feel the fall is overdone, at least in the short run. So one can look at buying this stock for a target of 6,200. A stop loss here would be 6,000. And as a disclosure, this is a stock that I hold in my personal portfolio as well.
All right, Kush, thanks a lot for getting us that quick technical check and some ideas for trade as well. By the way, there was some news flashing on M&M. They've introduced a new version of the Thar at a lower price at around 10 lakhs. Sonia, initially it was around 13.5, right, for the Thar, and would go up all the way to, I think, 16. So the stock is up. And I mean, of course, after the interview that we had as well.
Oh, absolutely. And it's now the biggest gainer, the biggest Nifty gainer, the M&M stock that is. And they are going big in this SUV space, All of the SUVs so far have done quite well. They're currently at 20% market share. And they also told me about how that 90,000 units is the total segment, B and C segment, the premium end of SUVs in the ICE engines. Now, their target is this 90,000 per month that is being sold totally. They want to convert it to EVs. Of course, it'll take a very long time for the transition to take place, but that's the opportunity that they're looking at, and it's huge. I guess that's the reason the stock is moving well in trade as well. We'll slip into a short break on that note. On the other side of the break, we'll get you more on the markets and a lot of stock-specific action. Stay tuned. So the general insurance sector data for the month of December is out, and Yash is here with a roundup of all the numbers. Yash, how does it look this month?
Well, Sonia, if you speak about the industry, the number is pretty decent on the growth front. The total industry, general insurance industry, which includes general insurers as well as standalone health insurers, there the premium in the month of December has grown by about 15%, which is a good number on a year-on-year basis. Up to December, the premium is up 16%. So no problem on that particular front. Standalone health insurance companies in the month of December have grown their premium by 23% on a year-on-year basis and 26% up to December on a year-on-year basis. But guess what? It's not a month. That is a month of December for the listed general insurance companies. So ICICI Lombard, the growth's fallen to single digit in the month of December. The premium has just grown by about 9% on a year-on-year basis. Up to December, because of the past good performance, the premium is still up 21% on a year-on-year basis. New India Assurance, the falling streak continues this time also in the month of December. The premium is down by about 2% on a year-on-year basis. So far up to the month of December, the premium has just grown by about 2% on a year-on-year basis. Finally, Star Health Insurance. The management has told CNBC-TV18 the company is shifting towards retail health insurance product, and that shift is restricting the company's growth. So the December premium was just up about 16% on a year-on-year basis. Up to December, the premium for Star Health has grown by about 16%.
Thank you very much for that, Yash. Get into a break. We'll come back with more on the market.
Welcome back. You're still tuned into Trading Hour. The market is looking absolutely solid right now. It's a 270-point gain. And in fact, the Nifty Bank, which was, underperforming at the start of our show, so about an hour ago, has actually picked up quite a bit now. So it is almost a 500-point move that you're seeing in the Nifty Bank as well. So that entire index also looking good. What's definitely leading today is the IT index. You have Tech Mahindra on the top, and then you have the likes of TCS, Wipro, all following closely. And there's also been a sudden spike that you've seen in ONGC, so keep an eye out on that one. M&M was doing well all through the morning, but it has picked up further. And on the downside, it is a few of the consumption names which are looking soft. So the likes of Britannia, it's one of the few stocks which is in the red. Tata Consumer also looking a little bit soft. So that's what's going on with the market action. It is a good day. So as we wind down, here is some important market opinion coming in from Manishi Ray Chaudhary of BNP Paribas. Thank you so much for watching, and halftime report will come up after this short break.
We think that the metal space, which has been, the China reopening has been possibly the biggest sentiment booster as far as the industrial metals are concerned, rightfully so. But at the same time, if you're facing a situation of global recession, and we are subscribers to that point of view, particularly in the developed markets, then it's difficult to see how this metal space can perform over a longer term. I think it's kind of fits the bill exactly in a different or opposite direction. It's perhaps a better bet for short-term investors over the next couple of quarters or so. As far as the tech universe is concerned, IT services in India, we actually reduced our position quite significantly in that December churning that we did. The IT services space, after a downturn in the first half of 2022, did reasonably well in the second half, and we think there was a reason behind it. The investor base was actually equating the North Asian semiconductors and chips with the Indian IT service companies, but the Indian IT service companies were actually winners. They were winning large orders from the developed market customers or clients.